Oh my goodness, everybody. Thank you for joining Tom and I on this week's Oklahoma City home loan slash financing frequently asked question podcast. I don't know if this is a podcast. Like, I don't actually put it on any podcast. Are there such things, Tom, as video casts?
We'll call them. Let's make one. Let's create a space.
Yeah, this is the video cast where Tom answers all your Oklahoma City Metro, state of Oklahoma home loan questions and financing questions. Tom, a big news came out in the FHA department this week is what you told me earlier. Can you tell homeowners and potential homeowners a little bit more info about some cool things that are on the FHA horizon?
I can, and I'm going to ask for your help a little bit, Josh. So the FHA changes, major changes to FHA. The big one is that they have lowered their monthly mortgage insurance.
Oh, nice.
Now, what they're trying to do is they're trying to gain more market share. So in the past 3 years, Josh, and the buyers that you're working with, do you know any kind of percentage on how many of them did FHA loans?
Maybe half, Tom.
I would say it's less.
The last 3 years it was pretty competitive. I mean, there was a lot of conventional, I guess, with cash, a lot of cash going down.
It has been mostly conventional. It's been mostly cash the last few years during the pandemic, right? Those when you get into an inventory problem and people start offering above market price or above asking price, a lot of those FHA and the government loans with the lower down payments, people are kind of priced out, right? And so
yes.
It goes to a conventional buyer with a big down payment. So FHA market share the last couple of years has gone down, and they're making some changes in an effort to get more market share, right? They want to be more competitive to today's buyers. Monthly mortgage insurance was a huge piece to that, and I'm sure they'll make some additional changes, some positive changes down the road.
So what was it before? Just like pull a calculator up and put some audio to those numbers. So before it was how much?
Okay, so before it was 0.85. I've done some
5.
And now it is 0.55.
So 0.03% on the annual loan value is the difference. Is that right?
Yes. Yeah. I'll give you some math that we did over here, right?
Okay, thank you.
A $300,000 purchase. Before this change, it was $204 a month. After this change, it's $132 a month.
Wow. So that's 204, 134, roughly $70.
$70 a month savings on a $300,000 purchase.
So they could go on one more date a month.
You go on nice dates, yeah, absolutely.
Yeah, take the kids to the indoor playgrounds 3 times more per month, and get 3/4 of your family in the science museum downtown in the science district. So you have to leave the most ornery kid in the car.
Well, we got good weather. You can let them run around at the zoo now.
Oh, that's true. How expensive is the zoo? I haven't been there in a while. Is it $5 a head, or is it more now?
I don't know. I love the zoo. We do a season pass every year. I'll pitch
sure
pass.
Hey, does Gateway give that away as like a bonus when you hit promotions? Is that part of your guys' annual party?
You haven't heard of that. That'd be a good addition, though.
Yeah. So $70 a month savings on FHA loans. That's pretty big. That's one tank of gas. That's awesome, Tom. Is there anything else they're doing to make themselves? I mean, now that the market's not as competitive, we still have low inventory, but is FHA doing anything else? I mean, they still have the most seller concessions that a loan can get. Is that right? 6% on a 6% primary home
concessions. That's on a lot of those government loan programs is a 6% rule. FHA has the 3.5% down payment requirement, right? So it's not a massive down payment requirement. FHA is somewhat more flexible credit score and credit rating wise than a conventional loan is. So FHA definitely has its positives. You just hope that this helps more FHA buyers get homes.
Here's a weird question. Does the mortgage insurance premium matter or adjust when they're using like local city grants or local state grants for the down payment? Does that number change at all?
No,
Oh, wow. So they could still take advantage if they meet the qualifications of a city down payment program or a state down payment program, and they still don't have to worry about as expensive a mortgage insurance premium as before.
correct. The monthly mortgage insurance is not based on where your down payment comes from. So if you get your city grant, you get a gift from a family member, or you save up the 3.5% on your own, you still get, everybody gets the same monthly mortgage insurance.
Wow, that's pretty cool. That's pretty
Mhm.
cool. And I hear also from you yesterday that what was it? VA might be making some changes too. And when does the FHA change go into effect?
For us, it's effective immediately.
Okay. So what if they had already filled out a loan application? Does
We
that
got we
go?
got to call them with good news.
Okay. Okay,
Yeah,
perfect.
if you
So they
filled
just
one out,
saved money.
yeah, you filled one out in February, 15th or January 15th, and you haven't found a house yet, you absolutely just saved money. Now,
Wow.
flip side of that, right? If you closed on February 15th, you are where you are.
Hey, but you got a house.
You got a house, you own a home,
It's hard to find houses, Tom. There's low inventory.
right?
So VA, they made some changes too.
Yeah, so VA, kind of one of the tough parts on VA is the funding fee. So VA has a funding fee unless you're at a certain percentage of disability, and then the funding fee is waived. But the funding fee it's 2.3. I don't want to mess this up, Josh, but the funding fee on VA home loans has gone down. On the second use of the VA home loan, I think it was 3.3. So, you buy a $200,000 house and you have a 3.3% funding fee, right? That's $6,600. That's a big funding fee. Now, funding fees are financed most of the time, right? So it's not really out of your pocket, but it kind of makes it hard on a VA home loan if you're going into it over 100% from the get-go to get out of there with some money, depending on how the home appreciates and everything else.
Now, when you say second use, is that like you're keeping your old VA loan and then you're getting another VA loan, or is that like even though you're selling the other house with the VA loan and paying it off completely, it's still considered a second use? Does second use mean two VA loans at once, or second use like the second time you use it, third time you use it, fourth time you use it?
It means all of the above. If you've used it once, you get the first use. At any time after that, it's second use.
Wow, so I did not know this. See, I'm a veteran, but unless I want to get in a house with no money down, I don't ever use it, because this is another example of how I feel like the VA home loan isn't as near good a deal unless I'm just trying to save as much cash as possible. There's been times when I want to get in a house and I want to keep as much cash in my pocket as possible. So I've used it. I think I've used my VA home loan twice over the last 20 years. But you're telling me the first time I used it, I had a lower funding fee. And then the second time I use it, I have a higher funding fee just for using it a second time.
Correct.
Wow, Tom, it's so hard to recommend this loan to people, especially when they have the capability to put the money down. Me personally, as a lender, you may not be able to speak to that point, so I don't want you to feel like you're in a position of awkwardness. But me, as a real estate professional, me as a veteran, I take the VA home loan unless, like I said, there's been times I want to get in a house, no money down. It's a great loan to use, but you could do that with USDA, and I don't have to worry, and I don't have to worry about it being charged an extra. You said almost a whole extra point almost on the second use.
Second use is 3.3. Yeah. I want to say first use is 2.15. So it is an extra point. It's an extra 1.15.
And veterans, a lot of education that I have to go through with the veterans is explaining how they think this is a benefit. And me outside looking in, real estate professional, me outside looking in, veteran myself, it's not necessarily a benefit unless the situation arises where I don't want to get in with any money down. If I've got 3.5% down, I should do that all day long. Or if I'm doing rural, which rural is pretty cool, the USDA rural, it's 0% down. Did the USDA rural's primary mortgage insurance have this same adjustment since it is sort of an FHA product, or is it still the same?
Well, we all are kind of assuming that they will. They haven't yet, right? We haven't had any changes to USDA. And on the VA side of things, I'm a huge fan of the VA home loan. It's 100% loan. It helps those veterans get into a home with nothing out of their pocket. And if you're 100% disabled, your rating, you get the waived funding fee, you get the waived property taxes in Oklahoma. There's some really good things about that program.
Yeah, if you're 100% disabled, I don't disagree at all.
Yeah.
If you're 100% disabled, I agree with you 100%. It's an amazing loan.
Deal.
Anything else on the VA horizon as far as benefits to its loan besides what we talked about?
No, I mean, again, I think it's just VA's effort to get more market share. So hopefully it works. And I think we're thinking both, on FHA and on the VA side of things, if they don't gain more market share, they're going to make more changes to help the consumer, to help the buyer to gain more market share. So we'll see how it, plays out this year.
Tom, if I'm talking out of my rear, please tell me, does Oklahoma have some sort of home savings fund thingy like they do for kids' education if they want to get ripped off by the colleges? Do they have some sort of home loan savings thingy?
You talking 529s on college? I'm not sure on the home loan one. I'll have to look into it, Josh.
Okay. And then, so where do you see rates? We're not writing this in the book of foreverness, but where do you see rates going right now? Do you think they're just going to hold steady the rest of the year, even if we do get another quarter point increase or another half point increase? Do you see any volatility in the mortgage rates?
Absolutely. It's a really hard question to answer, right? Because everybody that tells me they're going to get better, I got an equal amount of people telling me that it's going to continue to get worse. Maybe the smartest guy that I listen to has told me we should level out at towards the end of the year, but I forgot to hit DND on that, Josh. Sorry. That phone's ringing.
No, you can put quiet. No worries.
He thinks that we're going to settle around 6% by the end of the year, and then it'll be there for a little while.
There's nothing wrong with 6%, Tom.
No, and I'll tell you what I like is I just like it to be somewhere for a little while, right? The volatility is what makes it really difficult when it's, hey, you get approved to go shop for a house and it's 6%, and then when you find a house, it's 6.5, right? That's not fun. I don't know how to say it.
Tell me a little bit more about Gateway's lock program. Let's say someone like you said got approved and at 6, and then for whatever reason, like you said, it's 6.5 now. This is all projections. This isn't anything. Everyone's different. Tell me about the lock program a little bit.
So we have a lock and shop program that kind of goes in and out of being relevant or not. So, when rates are dropping, this lock and shop program is irrelevant. When rates are climbing up, it becomes relevant again. So we have a lock and shop program that we're talking a ton about this week. And I mess up the 45 and the 30 days all the time. So I'm just going to say that up front. But if you apply with us on a Monday, or we'll say Wednesday, March 1st, and today ballpark rate is 6.5.
With approved credit, blah, blah, blah.
All the disclaimer stuff.
Yeah.
We lock that rate for 45 days. We can lock for 45 days while you shop for a home. So it's called a lock and shop program. So it gives you that peace of mind that while you're shopping for a home, if rates do go up, you don't have to worry about that increase. And if rates go down, then you can take advantage of the better rate while you're shopping. So it's a 45-day lock. You have 45 days to find the house, and then you have to close within 30 days. But again, I mix up that 45 and that 30. But it's a good program. It's a really good program, especially in right now today's market.
What about your new constructions? Do they have long-term locks on those right now, or has corporate had to do away with it just because we don't know what Mr. Powell's going to be doing?
No, we still have 12-month lock periods. We have 6, 9, and 12-month lock periods on those new constructions. We're doing, with inventory low, we talk more new construction than ever. Most common misconception, Josh, we could have a whole call on construction loans, but most common misconception on construction is you have to have 20% down. And we actually have a great construction loan that's 5% down.
Wow.
Total acquisition cost. So the land costs you $100,000. It's going to cost you $400 to build on it. We want 5% of 500.
Hold on, that's $25,000.
Yep.
Is that
to build a $500,000 home in Oklahoma?
Yeah, that's pre-Common Core math right there, Tom.
That was good. That was
in
good.
my head. So that's really interesting. So new construction, you said 6, 9, and 12. And then lock and shop, it's roughly 30 or 45 days once you're ready to get serious.
Yep.
Is there a cost on the lock and shop if that goes longer? Is there a cost?
No, because if it goes longer, you start over. So, you lock on March 1st, and let's just say it's 45 days, and we get to April 15th, and the 45 days have passed, and you haven't found a home. You start over on whatever the rates look like on April 15th. You start over with a new lock and shop, so you can start over with a new 45 days, but that one's gone.
Wow. Well, guys, this has been such an interesting video cast this week. This is some really good information, Tom. On the mortgage front, besides FHA and VA becoming more competitive, are there anything additional that home borrowers need to know about home financing for this week?
Okay, so there's 3 ways. I'll be real quick on this one. There's 3 ways we classify properties. Primary residence, real easy, right? It's your main house. You live there. You're there all the time. There's some caveats to it, but primary residence. Second house label would be an investment property. That's a property that you're buying and somebody's going to rent it or Airbnb it, or you don't have full control of that house all the time because someone else might be paying you for control of it. That's an investment property. The third one that we have that we classify properties as a second home. Now, traditionally, a second home is a lake house or a mountain house or whatever. But the main thing that I think of on a second home is that you have control of it all the time. So you can't really rent it out. You can't Airbnb it because at that point someone else has control of the home. And I tell you those 3 things just to let you know that we've got some great rates, some great pricing on second homes. And through the last couple of years with inventory problems, all the agencies we work with have tried to limit second home purchases, and they've tried different ways to do that by raising rates, by raising these loan level price adjustments that we call loan level price adjustments. And we've just found a great avenue for second homes right now. So if you're looking at buying a second home in Oklahoma, call me.
And if it's a second home, they're not letting anyone use it. It's literally their second home, their private residence, no Airbnb, no VR, BR, or whatever that's called. What's the down payment on a second home? Is that 20%? 10. You only need 10% for that lake house. You only need 10% for that mountain house.
Correct.
Wow.
Josh, college house. So, somebody just loves OSU and they go up to the OSU games enough that they want a place to stay and they're sick of Stillwater hotel prices. Buy a second home in Stillwater. Buy a second home in Norman. Absolutely.
They have those houses, Tom. They're called game day houses.
Really?
They do. Yes. Whenever you're looking at houses for sale in the country club neighborhoods, in the gated neighborhoods, in the Norman area, in the Oklahoma State University area, the agents will literally let you know if it was just a game day house. That usually means that it's going to be easy inspections because the house wasn't really used that much. It was literally just used for game days, for if they're into the ballet or music festivals or stuff like that, or the wrestling, the basketball, all of that stuff. They literally have game day houses in places like Stillwater Country Club estates and stuff like that.
Yep.
Are you pretending you don't know that? You knew that, right?
I do know that, but I went to the small school, right? So I didn't get the whole big game day experience.
Did you go to Redlands?
I went to Northeastern State University in Tahlequah.
In Tahlequah. Do you know Aaron McKenzie?
I don't.
He's probably about 10 years our younger, and he's an up-and-coming MMA fighter. He's from Tahlequah.
Okay.
Yeah, I think he's being trained under Conor McGregor right now.
Awesome.
Yeah. Yeah, Conor, he put on a lot of weight now that he doesn't fight anymore. He have you seen Conor McGregor lately?
Good weight or bad weight?
Well, I mean, to him, it's normal weight. I mean, the dude's a monster. When he's not cut down, when he's not in fighting weight, the dude's still a massive monster. Because when they're fighters, they cut weight.
So
I don't get that, but I would be more scared of seeing him now in person than when he was cut weight. Me personally, okay. Because when he was cut weight, he didn't seem as intimidating. But now that he's at a normal weight, the dude is massive, a good massive, not a bad massive, just like a oh my goodness massive.
All right.
Well, Tom, this is great. I love this. I love this every week, guys. If you want to reach out to Tom Rosser with Gateway Mortgage, he can help you throughout the state. And then, Tom, what is the best way for them to reach out to you?
It's on the deal right now. It's a phone number 405-751-3800. And then the website would be gatewayokc.com.
And we put that in the comments, guys. So if you didn't get a chance to write that down, gatewayokc.com, it's also in the comments. And like Tom said, give him a call. And if you're in Edmond, just always feel free to stop by the office.
We love meeting people face to face. One of my favorite things.
All right, Tom. Well, thank you so much for today's, what is it called? Oklahoma City Home Loan and Financing Frequently Asked Question video.
Yes.
We'll see you next week, Tom.
See ya. Thanks.
All right.